I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Seamus Donoghue, the VP of Sales and Business Development at METACO. Seamus, welcome to the show, and thanks for taking the time to be here today.
Hi, Ashton. Thanks for having me.
I'm really excited for our discussion. If we could just kick it off first with a little bit of background on yourself and your expertise in trading, blockchain, and finance, then we'll jump into METACO after that.
Sure. I've been in finance, for quite a while. I started in banking in 1991 in Canada as well. I've worked for most of the major banks in wholesale trading side, JP Morgan, Deutsche Bank, Barclays, Merrill Lynch, and a short while a hedge fund. And a lot of that was running wholesale trading businesses. And eventually I left banking business to get into the startup space. I was very much involved in the intersection of trading and technology, and I launched a company around wholesale trading for commodities. Ran that for 4 years, and then migrated into crypto markets. I mean, moving from gold commodities, I was really focused on the gold market, and moving from gold into hard assets like Bitcoin wasn't such a big leap. So I ran a Swiss crypto exchange in Asia. And a small anecdote, when I asked how we were managing the keys for the client's assets, I was told we have 2 trusted employees that held those keys. And that brought me really to the issue that that's not the right kind of trust for an exchange. And eventually I got introduced to METACO and joined them in 2018 to help commercialize their business.
Very interesting. And yeah, that's quite the journey through banking to startups, and then gold and silver, and yeah, into the digital gold known as Bitcoin and the cryptocurrency space. It's super exciting, and it's growing so quickly right now with a lot of institutional interest coming in, and that's sort of where METACO fits in. So now, can you help me understand more about METACO's business and your current goals right now?
Sure. So we were set up in 2015, always with a focus on the institutional market. So we launched our main product in 2018, which is basically focused on delivering a product to large banks, financial institutions, to enable them to securely integrate, store, and manage digital assets. Those can be cryptocurrencies or other tokens, let's say. So I think we've had a significant traction in that space. We've been backed from the start by institutional investors. So I think unlike other companies in the market, we didn't start in the retail space. We're not a custodian trying to move in the technology space. From the start, I think one of the differentiators for our company is we really want to be the trusted technology partner for institutions that want to build in this space.
Mm-hmm. Definitely. And starting in 2015, the crypto space was so small with the market capitalization compared to what it is now. And it's still fairly small compared to even gold and the stock market right now. But it's funny, you were backed by institutional investors at the beginning, but you really didn't start as institutional custody. Can you talk about that pivot and when the company realized, we better get into this?
Sure. So the company was founded by 2 people, Nicolas Dorier, who's a core Bitcoin developer, and Adrian Tricani, who's basically a PhD in quantitative finance. And very early, they saw the opportunities in the space. And tokenization was obviously the big picture, longer term story that everyone gets excited about. So the initial business in 2015 was focused on tokenization. Now, obviously, it's still it's still a very nascent business, so it's well ahead of its time in 2015. Mm-hmm. And they realized if you tokenize anything, well, how are you going to secure those assets? So eventually, they decided to attack and provide institutional custody because there was nothing in the market at the time.
Mm-hmm. Yeah, and now there are quite a few different institutional custody platforms. It seems that institutional interest in digital assets is growing exponentially throughout 2020, especially in the latter half here. I'm seeing it more and more every day. And I've researched a little bit into METACO's platform, Silo. Can you talk about if there's a unique advantages or competitive advantages of the Silo digital custody platform across the space?
Sure. I think one of the unique propositions is that we are focused on the institutional market. We really describe Silo as a digital asset management solution. I mean, some companies in the space say they're hardware-based security. Others say they're MPC-based security. I think we're really, how you want to deploy this, it's up to you. So if you want to deploy it in hardware, you can do that. If you want to deploy it in MPC, all software-based, we can do that as well. We work with a number of strategic partners like IBM in the market, which delivers the highest security in the market in terms of HSMs or virtual HSMs in terms of an on-premise deployment or cloud. And we work in MPC space with a company called Unbound, which is one of the leaders in research, the research space from MPC. So we typically partner with the best in the space. We've got a strong track record of clients in the space as well. And I think the strongest USP in the space is having the right client references. And I think that's where we've particularly shone very well.
Definitely. And in the institutional space, having large clients and getting in early as well, I think those are the smart ones. And I was looking through your platforms and your partnerships, and it seems like you have partnerships all around. But one in particular that I noticed was in Switzerland with Gazprom Bank for this Bitcoin trading services. Can you talk about your relationships in Switzerland and how you're dealing with these Bitcoin trading services?
Sure. So Gazprom Bank's a private bank, and I think they're an interesting client because they're actually a client of one of our clients. So we provide infrastructure to banks, but we also provide infrastructure to other infrastructure companies that provide infrastructure to banks. And in the case of this one, one of our investors and one of our partners is a company called Avaloq, which provides core banking software. So basically the foundation that operates the bank systems. And they're focused on the private banking market, and effectively we've been deeply integrated that solution. So if one of the banks on their solution, the whole private key management silo is a module, but it's completely abstracted behind the core banking system. Gazprom was their first client that they deployed the solution to. They've got 150 clients, banking clients worldwide. So any one of those clients have a turnkey solution. So that was their first client, but we work with a number of other banks in the space as well. So we're strong in Switzerland with clients such as that. But any jurisdiction where you see the regulators supporting banks to move, Germany, we work with Börse Stuttgart, one of the leading probably regulated digital exchange in Europe. In Singapore, we work with Standard Chartered Bank. And just today, it was announced that Northern Trust is also going to use our infrastructure. So the banking space for us is really a very strong area.
That's great, and congratulations on those new partnerships. Now,
Thank you.
I want to get your perspective on high level of the growing institutional interest in Bitcoin and the digital asset space throughout this year, and I'm sure it's reflected in your customer base continuing to grow as well. How do you see the space, even from when you joined until now, and then into in the next 12 months?
Well, I mean, I think I would describe it more broadly that I think the whole blockchain space is going through what I would describe as the traditional hype cycle we see, or they call it the Gartner hype cycle, basically. But you have the whole boom bust stage, 2017 into 2018, the collapse. Obviously, that was the boom and the bust. That was very retail driven. But I think it started in motion. It funded a lot of projects. That whole boom has a point. Same way we saw the internet get funded in late just before 2000. The railroads got funded in the US. A lot of those initial companies went bust, but a lot of investment went in this space. And I think what we've seen since 2018 is a lot of institutional stealth deals, a lot of visionaries that basically decided to invest in the space. Think about Fidelity. As I mentioned, Avaloq, one of our investors, also decided long before it was commercially viable to get involved in the crypto space. And those institutions basically were the pioneers. And now I think we've come out of that. There's been sustainable investment by a number of large institutions that we're seeing mainstream institutions. JP Morgan is a good example. So as you know, basically in 2017, JP Morgan's Jamie Dimon described Bitcoin as a bubble, similar to tulips that would end the tulip bubble that would end in tears. And just 1 month ago, they launched a new division entirely focused on blockchain, commercializing blockchain, including the JP Morgan coin, and 100 employees, and it's almost profitable. So I think you've seen a full about face in the institutional sector. You're seeing, as I mentioned, Northern Trust announced today they're using our infrastructure. All the mainstream legacy firms realize this is no longer basically a nice to have, it's an essential have. There's strong investor demand from their client base, whether that's funds, hedge funds. We've seen some of the luminaries in the hedge fund space say they're getting involved in Bitcoin. We see corporates now allocating Bitcoin as a treasury asset. As we've seen MicroStrategy with Michael Saylor. I think this is a broadening movement. It's still early, as you said. Bitcoin's still a $350 billion asset, but I think we're moving into a virtual cycle that as more investment comes in, the size of the market grows, and it becomes too large to ignore. I think this is the dramatic change. So it's a very positive reflexive cycle we're moving into now.
Definitely. I think we're nearing that pivot point where a lot of institutions are seeing these billionaires that took the early step ahead and they said that you need to have this as a diversification tool, at least in your platform, at least considering it. And some of them even going as far as saying it's irresponsible if you don't even consider it, right? So it's at a very interesting pivot point. And now with the institutional interest coming into the space, that obviously is going to help with the regulatory environment, pushing it forward faster. Can you talk about the regulatory hurdles that your team is working with, and how you see the space right now, and how quickly it's progressing towards having more mainstream adoption with more regulatory environment that's stable?
Sure. I mean, I think there's been some leading jurisdictions that drive in the kind of the regulatory, reg, reg, the regulations in this space. Switzerland's one of them. The regulator here is called FINMA. We've seen the same thing out of Singapore, MAS. And I think those are globally two of the leaders. And I think other regulators have taken notice that this is something that is not going away. It's something that is here as long term, and has a number of basically strong propositions for the financial sector. There's a lot of efficiencies you get from DLT. I think blockchain really can revolutionize the way we think about capital markets. And obviously, Bitcoin as an investment vehicle is growing in stature. So I think what you're seeing, regulatory, let's say, hurdles or barriers dropping everywhere. I think you see more definition, the taxonomy about this asset class. And I think regulators are supporting it. I think there's always some concerns that regulators would ban it, or that was kind of a narrative we used to hear, but it's not the case. And I think, if anything, this is moving in from a regulatory perspective into a mainstream asset. And as it gets regulated, that enables institutions to come into the market. So it's a very positive thing globally, I think.
Yeah, I agree, Seamus. And speaking of the regulatory environment, there's also, METACO is also working in part in the central bank digital currency CBDC space, which is very exciting, and a lot of people are interested to see how that's going to play out in their countries. Can you talk about how METACO is working in that space right now?
Sure. Well, I mean, I think this is a space that, central banks move in very long-term cycles. Historically, you're talking about 10, 20-year planning cycles. The launch of Libra, now called Diem, really basically focused that sector that they needed to respond. It was the first time basically a non-sovereign had a much larger population. 2.5 billion people use basically Facebook products. So this really accelerated the planning around and experimentation in that space. And we work, two of our investors are some of the main suppliers to central banks in the traditional space. One of our investors is called SICPA. They're a company based in Switzerland, just near us, which produces the inks for most central banks, paper money. And we did another fundraising in July this year, and that was led by a German company called Gesecki and Devrient. And they also provide services to central banks. For example, in the case of Germany, they print the banknotes for the Bundesbank using the inks from SICPA. So we have two of let's say 4 or 5 largest suppliers to central banks. Gesecki and Devrient has a CBDC solution called Filia. So I can't go into specific details, but I think given the prominence of our partners in this space, and given that we have solutions that have historically been very much focused on the commercial banking market, there's a lot of synergies helping the central bank on the issuance side, and then working with the commercial banking sectors that need to support this asset, this new digital currencies.
Definitely. And it seems like it's really piqued the interest of almost every nation that, they need to start working on this technology. Yeah. Do you see it as, I know their cycles are much longer and they take time to make decisions, but do you see it as, from their perspective, as sort of a race where, they will fall behind if they take too long? And I'm guessing that, the European countries, that some of them may be able to move a lot faster than in North America to change the financial environment through the central bank.
Well, I mentioned Libra, but I definitely think there's some geopolitical element to how fast the central banks are thinking about addressing this, or nation states are thinking about addressing this. China's launched their currency. They're experimenting fast. And I think, COVID has really changed the narrative around the need for these things. In many respects, we already work with digital currencies. I mean, many of us use credit cards. I mean, in the East, in Asia, basically having an electronic wallet attached to your phone is pretty much the norm. People don't carry cash, and COVID's only made that much more dramatic. I haven't really used cash since March this year. So I think it's not so much acceptance in the retail side. It's, as you said, basically the planning cycles have been typically quite long on the central bank side, but there's a lot of cost savings to be had by getting rid of cash. It's a very expensive thing to produce. And I think what they realize, when you're trying to basically reach out and have monetary policy to resolve crises like we've seen in the US this year, globally with COVID, the idea of a programmable digital money where you can send money directly to those that need it. Basically, you don't have this wastage. So you can send it to a restaurant in whatever city, you can send it to a specific sector of the population, a specific geography, and you can basically make sure it gets to the right place. this, I think, we've had a year where we see use cases. This would have been absolutely the right tool to have at the time. So I definitely think this is coming sooner than people think, probably the next 5 years in some countries.
I think it definitely lit a fire, in their hearts with the COVID acceleration and sort of cash seemed to be in shortages. So definitely excited to see how that plays out and which countries will make the first move. We're nearing the end of the interview, Seamus, but I want to talk about the future of METACO. What are your team's plans moving into 2021? What are your main focuses?
Sure. I mean, up to now, we've really focused on large tier 1, tier 2 banks, those that can manage the technology themselves. Our solution has been what we call an on-premise solution. So we sell the tech stack to a bank and they manage it. But what we realize is there's a lot of complexity in this space. Not everybody wants to manage technology. I think there's a broad trend to move everything to the cloud, to externalize a lot of the tech stack in banks and financial institutions. And we've responded to that. And in Q1, we'll launch a full SaaS solution. So the clients will have the option to basically have an on-prem solution, or they can work with us and just manage the private keys. So I think this really enables us to address the entire market, work with fintechs, work with smaller banks, work with corporates, because effectively, as corporates get into the space, they'll need solutions as well. So for us, we're really moving to a new phase, much larger addressable market. And I think with the acceleration of the underlying market, it's really about scaling. We've got a great product market fit, great client references. It's really, this year is about executing it and really building a global brand.
Yeah, I think 2021 is really going to take off, and hopefully that reflects in METACO's growth as well. And so how can viewers learn more about METACO and follow along as you continue to grow?
Well, obviously, metaco.com, a website. I'm on LinkedIn, Twitter. Feel free to reach out. For example, we also have a bi-weekly webinar called METACO Talks. Look it up. Join us. We really take live questions. Feel free we have happy to reach out and connect with anybody that wants to learn more or look at potential partnerships, clients, synergies, etc. Love to hear from everybody.
Thanks, Seamus. I will leave those links in the description box below for the viewers.
Thank you.
All the best on the business moving forward, and let's follow up in the near future.
Thanks, Ashton. Been great to be here.